Hi, everybody. This is Jack Milligan with you again from the SPI Group, Settlement Professionals, Plaintiffs MSA, and Lien Solution, and Settlement Capital Advisors. This is your weekly structure update. Now, we took last week off due to the holiday, so this will be the fourth update we've done here since we started this little service. So these are for rates effective December 6th. So what's the news across the nation, as they say? Well, we continue to have rate decreases from all companies in the structured settlement marketplace except for one. And it just happens to be the one company that we are using for our structure rate updates. We don't identify this this company in our handout, which you can download at the bottom. But amazingly, this is the only company that we've seen on the board that has not decrease their rates. And so the gap between this company and all the other companies is continuing to widen. And I think it's what's going on here is the company that we're surveying and then transmitting to you all. And by the way, we picked this company because they're generally in the middle to higher end of the pack of annuity carriers as far as their rates. We didn't expect that they would jump to the head of the class, so to speak, this rapidly. But I want to show you with a share screen here what's been going on in this 10-year bond market. I talk about the 10-year because that is that's the security, the government security that we've noticed now for many years. Is the security that these insurance companies are evidently wheeling off of when they set their rates. Now, at the beginning of the year, you don't see it in this graph because I've cut it off and made it just for the last 6 months. But at the beginning of this year, the 10-year United States Treasury was at 1.63. Right up here at this peak where my arrow is about October 24th. And this 10-year made a high of 4.25%. I mean, that is an amazing climb this year. It's about 150% increase. We dropped down here to just below 4%. That's 3.96 on October 27th. And then here on November 7th, we started this process of updating you all on these structure rates. And right up here, this is 4.22 on November 7th. Then on November 10th, we dropped down to 3.82, and then 3.67, and then we're back up to 3.83, and then 3.75, and then today, here we are, clear out here, December 5th, 6th. These are the rates that are effective as of the close today, December 5th. We're at 3.51. That's a pretty good drop. You can see what's happening here. It appears the 10-year has peaked for the time being. And that's probably, there's two reasons. Fed Chairman Powell has announced that the Federal Reserve is probably going to slow down the rate of increase. And as we've seen, the markets had a momentary reaction. But what really happened here to drive these rates down is that once we got over 4%, the big hedge funds, and most notably a hedge fund run by an individual by the name of Bill Ackman, it appears that these hedge funds backed up the proverbial pickup truck and loaded themselves down with all of the 10-year treasuries they could buy once they were up over 4%. And of course, supply and demand has not been defeated in the universe. So when there was a lot of demand for the supply, that started driving the price down. It drives the price up and it drove the yield down. And so that's why we're seeing this drop. And it may be exacerbated by what the Fed is telegraphing. So let's take a look at our rates for this week and give you a quick view of what you can download below. So here we are. Here are our structure rates for December 6th. And you can see still no change. Again, we just got a rate decrease announcement today from one of the big New York companies. Probably the biggest New York company, if you want to read between the lines. That's their second rate decrease in this last 30 days. And that means that we've seen rate decreases from just about every company out there that offers structured settlement annuities, except for one. And you can see these rates. We still have rates for some categories of these structured settlement annuities that are over 5%. The lifetimes for age 30 and 40 are over lifetimes with 40 years and 30 years guaranteed, over 5%. A 30-year certain only is over 5% down here. A deferred 10-year with 10 years or 20 years payments are both over 5%. And then lump sums in 15 and 20 years are well over 5%. So still some incredible yields out there. Don't know how long this is going to last. As you can see from that prior graph, this 10-year has been dropping now from a high of 4.25 all the way down to 3.51. That's 74 basis points in 30 days. That's breathtaking, almost as breathtaking as the rise this year. So you can download these rates if you want to have them on your desk or show them to a client. These are structured settlement rates. That means they're tax exempt payments for your plaintiffs. They're tax deferred for you attorneys if you're looking to structure fees. And there's still plenty of time here before the end of the year. If we do get a rate decrease announcement from this company that's on our sheet, we will have 7 days within which to lock in those rates, and then an additional up to 60 days to purchase those annuities. So you've still got time to lock your clients in. Give us a call. And as always, you can download this rate update, and then you're free to download our free guide on deferring the attorney fee. All of that material is down below. I'll see you again next week. Take care, everybody.